It is so important to trust your own analysis when you know that it's sound and as per your system. And here today, I experienced one of those moments where a little bit of doubt crept up and I did not get the optimal results. So if you're new here, I'm Hema Reddy. I use price action, market timing, or forecasting and momentum to boost my trading and that of my tribes. And I'm going to talk through the trades I just completed on the E-mini S&P 500 futures. So that is ticker ESZ23 for the December 2023 contract. But definitely save this video, subscribe if you haven't already, like this channel at the end if you get value, because the lesson I share here is something you can revisit. It's not just specific to current market action. So we are on the weekly chart. I always start on the weekly chart, and I saw that we still remain strong coming into the market this Wednesday, November 29th. On the daily chart, I saw that we had consolidation that ended up breaking higher, and my main upside target has been 4597.5, the high from September 1st. So even though I'm doing day trading on very small time frames, my targets come from the daily chart. Now, here is the window that has the most analysis, the 60-minute time frame. For me, this is like the pulse of the E-mini S&P market. So this is what I publish in my Skinny on the Mini report and send out to fellow traders. I then take the analysis I publish and then I go an extra level deeper. So some of the annotations you see here are not on this morning's report. Now, when I came in, I saw that even though the hour ending at 9 a.m., right, before the market open was a doji, so that sometimes is a candle that people think of as a reversal. In this case, I knew that that was probably short-lived. And all my other analysis, okay, looking at the directional moves of the market, looking at short-term forecasts, momentum, everything suggested we would trade higher towards 4597.5. And you can see that that's happening. Now, I got a piece of it, but I didn't get all of it, and it's because I did not trust my own analysis. It happens to me too. Doubt crept in, and here's what happened. So here's a 3-minute chart, okay? So I use a combination of a 3-minute chart and a 15-second chart to take action and manage trades. I will analyze the 3-minute for major levels that add to my 60-minute analysis, and then I'll use the 15-second chart to manage the trade. So here's what I mean. Coming into the market open, there was this bar right here, okay, that's what was happening right into the opening of session. And I saw this important entire support level from the bar ending at 9 a.m. Eastern, the 3-minute candle ending at 9 a.m. Eastern, right? I also saw we were in the RSI power zone support, the GAN drives, everything suggested that we were going to break higher from this consolidation. So I went ahead and proactively put an order on at 4584.25 because that was the level that is the actual tick closest to the key level in this price low. I got filled pretty much right away. And now I'm going to go to the 15-second chart to show you how I navigated that. All right, so here's the 15-second chart where I have chart trading on in TradeStation. This is a feature that just plots the trades I made here on the chart, so it's just easier to analyze. I use the order matrix to place my trades, just my preferred style. Not the order bar, not the chart, okay? So this is just for review. And I customize the arrows and lines to colors that work for me. Okay, so coming back to what I was saying here, this long here was reflective of buying based off that 3-minute signal, which was a combination of price, momentum, and bigger picture price levels. Now, I buy 2 contracts, and so my first exit is always just kind of getting that quick win. So that was here, and you can see that was 2 points away. So I entered long at 4584.25, first exit 4586.25. I immediately then raised my stop to a maximum 2-point loss on the remaining trade because then, guys, I'm in neutral territory. I can't lose on this trade. It is a great technique because it basically removes so much fear or doubt, right? If you get that 2 points made, and you can only lose 2 points in the remaining contract, +2 and -2 comes to 0. So worst case, I end up break even, minus commissions, okay? So I raised my stop, and then I just let the market do its thing. So let me show you how I manage this trade. All right, so I'm gonna just kind of zoom in to make the bars really fat, and we're gonna quickly go through what 15 bar candles unfolded. So you can see the market took off higher. Now these are 15-second bars, so they are happening fast. I raised my stop. I'm counting my notes here. 1, 2, 3, 4, 5, 6 times after this initial raise. And I did it based on the 2-bar lows, price lows, all the techniques I teach in my courses and books. I followed this. I was like, Dorothy on the yellow brick road, okay? Until it turns, I'm going Oz, okay? And even here, I got a little doubtful. I just followed it, ended up continuing higher. I was still long that second contract. Still long, and finally stopped out. So this yielded my $500 or close to $500 win for the day, and my goal is to make $1,000 in less than 30 minutes. A lot of traders are like, well, I can make more than $1,000 if I sit there all day. Yes, you can. But then you don't have time freedom. You don't have freedom to do other things. I wouldn't have the time to work on my education business. I wouldn't have the time to go to the gym for 2 hours, which I do 2 to 3 times a week in the morning. There's lots of choices of what you want to do, okay? This is my choice. So I could have called it quits here, but then this is what happened. I immediately saw, going back to that 3-minute chart here, okay? I saw this doji candle, which wasn't necessarily a bearish indication because, again, my big picture eyeballs were up on this 4597.5. But I was like, there's probably going to be a pullback of some sort and an opportunity to go long again. So I used forecasting to measure that. And that exact level based on forecasting techniques, which my loss forecasting students, you all know, okay, was 4589.25. So I want to make clear that at this point in time, I was sitting here with a plan to buy down at 4589.25 if it gets there. What I should have just done is put a resting order out there, meaning you putting your order ahead of the market even getting there. I don't know what happened, but I didn't. Okay, I had at least 1% of doubt in myself, so I didn't. So I just let some consolidation unfold. And then I saw this happening here. And then I was like, is the trend changing to down? And then something my dad taught me, my late father who taught me trading, came in my head. He's like, Hema, if you're waiting to buy down here and you're not sure, because you're not sure if that support's going to hold, why don't you sell in the meantime? And that was perfectly valid. However, if you're going to sell counter to an uptrend, you have to accept the risk of the trade. You always have to accept the risk of the trade, guys, but it's especially important if you're going to go counter trend, okay? So using forecasting techniques again, there was expectation to trade down to 4589. So it's like the chart was yelling at me, screaming at me. Either stay out or go short until you get to 4589.25 to 4589, which is only a tick apart. So I went short here. Took me time, but I finally went short at 4591.75. But the moment this started getting choppy, I could feel my stomach turning. Does that happen to you? You start feeling gassy and bubbly and belchy and like suddenly fear has taken over. And I realized it's because I knew that this counter trend trade was counter trend. And I didn't want anymore to be trading to exit here and go reverse long. I'd rather just wait to enter long down here, okay? So I got out at basically break even. As you can see here, I think I lost a tick. No biggie. But then here's what happened. Because I had done this sort of cute trade, which is not a bad idea, guys. It's totally per my plan. The problem is, for some reason, I wasn't willing to accept the risk of this short trade. It skewed my brain, and while all of this unfolded here, okay, all this sideways, look what happened. This market came right into both of my forecast targets. There are two different forecasts producing the same target. But because I had gone through a period of doubt here, I wasn't able to pull the trigger and take action here. So I missed my ideal entry. I would have literally bought at the low or one tick from the low, okay? That snowballed a little bit, and then I started to feel FOMO here. I missed out. So I went long. And here going long is fine. It was based off my plans, based off my risk. I got out on the first contract. Took a little bit, but I got out, okay? So I got my 2 points. Raised my other trade to 2 stop points, or 2 max points loss. But then the moment this happened right here, so we had a higher price high, 948, but we didn't see RSI move the way it should. I started to get concerned. Is this going to be a trend change? And just all my emotions were bubbling over. And I was like, you know what? I'm going to GTFO, okay? When in doubt, get out. Now, I didn't just exit the market. I raised my stop to break even above the entry. So I moved my remaining stop to one tick above my original entry so that this could no longer become a losing trade. It could only become a bigger winner or 2-point win. And here's what happened. It came back down and it's got me stopped out. So you can see the color of these two lines are blue, so that was a winning trade. But let me show you what unfolded from there. That's frustrating, but you know, it's part of life, and this is a good reminder to me, okay? Market came back down, regrouped. All it did was revisit this zone of support from 944, and then boom, made its way back up right into my target area, 2 ticks shy of my target. And here we are. I'll bring it to real time, okay? And then fell back down. So I just wanted to show you that happens to the pros too, okay? I don't know what specifically it was, but I just really wasn't believing that my market levels would hold here. Sometimes when you get so accurate, it is actually challenging to believe that you can literally call the market on a dime. And I'm not saying everybody can do this. I'm not saying that if you follow my education, you'll be able to have this skill too, okay? That's not guaranteed. But I have developed it. And it can throw me off now and then. But that's okay. At the end of the day, between all these trades, my net profit was $536. The moment I was done with the second trade, I knew my head wasn't exactly right. And I was like, it's okay. I'd rather not trade and make my skills worse than trade just to try to get back in on this. There's always going to be another day. There's always going to be another trade, okay? So there you have it, okay? Great example of me following my plan in the beginning, but then whatever doubt seeped in prevented me from acting on my great analysis. So you've got to get your mindset right. And that's not something I teach in its own course or its own lesson, but I incorporate it into my education with you. So I hope you found this valuable. Again, I'm Hema Reddy. If you have not yet subscribed to my channel here on YouTube, please go ahead and do so. If you enjoyed this video, whatever platform you're seeing it on, please give it a like, and bonus points if you comment down below and tell me what nuggets you got out of this and if these types of videos help you out. I'll be happy to share more in the future, all right? So keep at it. Make sure that your mind is right. There's all kinds of ways to do that. And that's what's going to make your analysis actually fruitful for you. Catch you soon.